hey, Imran, if I get all my money from an equity investor to buy a business, what is the reasonable amount of equity she could expect in return? It's a damn good question. So in terms of getting equity investor, it's all negotiable. There's no right or wrong here. So there's few ways to look at it, right? One of them is like, let's say the business worth, or you're paying for the business $1 million and you're bringing in an investor that's going to put 100,000. One angle says that he should get 10% of the deal, right? Another angle might say that if that $100,000 is the only way to close the deal, or if he's bringing all the, like by definition, if he's bringing $1 million for a business worth $1 million, he deserves 100% of the deal, right? If he's bringing $100,000 for $1 million deal and the 90% is money that you raise from the bank, so it's debt financing, then you can also argue the fact that he deserves 100% of the deal because without him, there won't be any deal. And then it's on you to actually justify why you deserve more. So potentially you signing personal guarantees, it means you deserve more. You running the business, you deserve more. You have some background or experience or understanding of the business, you deserve a bit more. And it's all points that you negotiate with each other, right? In my mind, the person who brings the money, unless there is a deal without him, he deserves everything, period. Like that's, if you look at the private equity space, when they're bringing the money, if you're doing nothing but giving them the deal, you'll be lucky to get 1% referral fee, period. If you're running the business and you're kind of like the management team, you might get 20, 25%, that range. So you need to ask yourself, what are you bringing to the table? And when you're bringing an equity investor, you need to sell yourself, right? And that's why in the capital video in the program, I talk about pitch decks and stuff like that. You need to sell yourself. You need to sell yourself like it's the sell of your life, right? You're bringing in an investor. He's going to ask you like, what are you bringing to the table? What are you bringing to this deal? And a lot of it comes down to the stuff I teach you in the program. It's the fact that you're going to understand the business better than him. You're going to run the business better than him. You understand basic fundamentals of business and actually going to do the work and, kind of like sweat equity, right? It depends who's the investor. Some of the investors don't want to be involved in the deal at all, and they would just want passive investments. Some of them want to be involved, and they might ask for more, and they might ask for control with every decision. So it really depends on the investor, right? If you're going to raise money from your mom or you're going to raise money from a venture capital firm, it's going to be a very different deal structure that you're going to have with those different parties, right? From your mom, you can tell her whatever you want, basically. It's like, mom, here's the deal, take it or leave it, or take it, mom, give me your money, right? For a venture capital firm, it's going to be quite the opposite. They're going to tell you, hey, here's the deal, take it or leave it, and then it also depends if you're talking about like a middle ground, like I don't know, if you're talking about like a real estate investor, they might say, you know what, I don't care about the equity, just give me, or maybe they will, maybe some of them will say, you know what, I don't care about the equity, just give me 10, 15% a year, something like that in between. Some of them will say, you know what, I want preferred with a coupon, I want 10, 20, 12, 20, whatever percent you negotiate with them, with equity, without equity, with carried interest, without. So it's all negotiable, all depends on you and the investor. And there's no right or wrong. It's literally what makes sense for you and what makes sense for the investor. And based on the level of sophistication of the investor, you just need to find a way to make it win-win for both sides. So that's kind of like would be my answer on how to look at an equity investor you bring to the table. But you need to come with the understanding that if he's bringing all the money, he deserves everything, period. And then it's your turn to sell yourself on why you deserve anything at all. Because unless you come with that mindset, you can look as an amateur to some investors. I would say that. So for example, if you would go to a venture capital firm and tell them, hey, bring me money, and here are my terms, they're going to look at you like an idiot. A lot of private equity firms as well. If you're going to come to them with a deal and you're like, hey, here's my deal, I'll give you 10%, they'll be like, who's that guy? He's a joke. You don't understand. Like, we don't do business this way, right? So just be aware of that. That's why I'm saying come with the understanding that if he's bringing the money, he deserves everything, and it's your time to justify and sell yourself on why you deserve more. So hope that answers. And again, it might be a bit looking at it from a less optimistic way of looking at things. But I think that's the way, because otherwise you'll just shoot yourself in the foot. And at the same time, let's because I don't see other questions, so let's talk a bit about the optimistic side of things. You can also ask for whatever you want, right? If it's a good deal for the investor, then you can ask for it, like whatever terms you want. So if you are buying like $1 million business and he's bringing $100,000, to the deal, you can give him 10%, you can give him 5%. If it's a good deal for him, then it doesn't matter in the end of the day. If you can get him good returns, or show him a potential good returns, or show him good cash flow in the business that might give him good returns, that's what matters in the end of the day. And based on the type of investors and his risk profile of what he's willing to accept or not in terms of his investments, that's what will determine kind of like what makes sense for everyone.